Dividend Stock Talk. Loading, loading, go live. Everything is good. Hey, Brandon's here. How's it going, Brandon? Just getting everything warmed up. Let's get this party started. Yeah. Managed broadcast. Should be relatively simple. No, it's not made for bloody children. Entertainment only. Brandon, how's it going? Ooh, we got somebody over here on Yahoo. YouTube. YouTube. Stop recording, get down there, and let's get started. Robin, my boy Suey. All right, so everyone, this is James from Dividend Stock Talk. Look at that, I have a ball. Yeah, interesting. All right, so anyway, this is James from Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow, taking you along for the ride for that safe, predictable, consistent 1% per week. Now, I trade a simple trading strategy, very simple. It's called a covered call. Jessica King, how are you? Box Pilot, Lady Bella, everybody showing up tonight. So as I'm saying, I'm doing a covered call strategy. It's one of the safest trading strategies. Where you buy the stock, you sell the option. It's a call option. Yes, if you're not a little afraid of options, don't be. They're very simple. At my cabin celebrating the weekend, had to still have your show on. Well, Brandon, I'm going to take that as a compliment. Anyway, Jessica King. All right, thanks for sharing the live there, Miss Jessica. All right. 82 already. Wow, we're getting streaming. Okay, so let me get some of the disclaimers first. First of all, I'm not a financial advisor. I'm not an accountant. I'm not a bookkeeper. I'm basically nobody. I'm the guy next door, the guy, crazy guy, get down the street. I'm here. You can begin. Recon is here. We can actually get started. We've been waiting for him to show up for hours. It's about time he's here. Recon, way to go. Anyway, let me get back. Whatever I say, you guys, please take it to heart. Find a way to research what I'm saying. Is it true? Is it not true? Do you believe it? Do you not believe it? Is what I'm saying the facts? I'm reading to you numbers that came from the stock market. I'm just rattling them off the top, not off the top of my head, but actual numbers. Look at this, we got two people showing up. Kuhn is here, woohoo, Mikey's here. So whatever I say, ask yourself the question, does it make sense? I mean, seriously, does it make sense? Is what I'm saying accurate? Is it true? Okay? Don't take anything I say and take it to heart. You just ask yourself the question, does it make sense? All right. Last night we finished up with JEPI because somebody asked me my opinion in it, and I said, you really don't want my opinion of JEPI. Hard to find stocks at good entry points to sell covered calls. AMC, not actually. I mean, I look at 300 different companies. That's it. Okay, there's 9,567 companies that you can choose from at any moment. So if on my paper trading account it says it makes sense, oh, well, all right, Miss Jessica, keep doing it. I've been trading for 20 years. I still have a paper trading account, okay? I still practice my trades because when it comes down to real money, yeah, I don't want to make any mistakes. And trust me, I have made a bunch of mistakes throughout my trading life. Okay? I've made more in one day than most people make in a month. Okay, I've lost more in 1 week than most people make in a year. Trust me, those lessons are extremely painful. Courtney, thank you for following along then, Miss Courtney. So, that being said, I basically have no no experience whatsoever. I have no authority whatsoever to be teaching these strategies. None. Nothing but common sense. Okay? Back in '08, when my daughter was 9 years old, she wanted to trade just like I did. So I had to come up with a trading strategy specifically for her. Can we look at Kohl's? Going to try your strategy on Monday. Any other recommendation? Yo, Johnny, were you messaging me earlier? All right, Issa Mike. When I tell people, hold on a second, hey, I noticed premiums are higher on Friday. Would it be better to trade Friday instead of Mondays? Yeah, but you have one problem with that, Jessica. When you're trading on a Monday, the options expire on Friday. So your money is still locked up until after hours on Friday, which after that time, there's no more money to trade. So all my money is invested from Monday to Friday. So from Friday to Friday, the numbers just don't work, because if you sell it on Friday, well, you can't, because the money's tied up in a position that you already have. I don't know if that makes sense or not. Oh, so as I was saying, let me continue. I have no rights to be here. I'm just your average everyday guy. Okay, I owned a manufacturing company. I made a few dollars. My daughter wanted to learn how to trade when she was 9. This was back in '08, like 15 years ago, 16, 17, whatever, however long ago it was. So at 9 years old, I had to come up with something that was simple, safe, predictable, consistent, in no way that she could lose. If you trade, doesn't it go right? You modify the trades in the middle of the week or stay until Friday. Yeah, I buy on Monday, Tuesday, Wednesday, Thursday. I just look at it, see what it's doing. Friday is the day that I figure out, what am I making money this week? Am I not making money? Do I have to do anything? Yeah. So let me finish up with my disclaimers. So when my daughter was 9, she wanted to learn to trade. It had to be simple. It had to be safe. It had to be predictable, consistent, in no way that she could lose. That's 5 criteria I had to come up with to teach a 9-year-old how to trade without losing. Okay, so I come up with 5 rules. The 5 rules are very simple. Okay, and if you follow the 5 rules, you shouldn't. And they're like so logical. It's almost sad that it's so logical, and people want to make it more complicated than it has to be. Number 1, never buy something you do not want to own long term. Don't buy something if you don't understand it. Don't buy something unless you can describe who they are, what they do, and you know what the numbers are. Okay, never buy something you don't want to hold long term. Long term may mean something different to you than it does to me. The longest I've ever held anything was 9 months. Now, I've been trading for over 20 years, so why have I, the longest thing I've ever held 9 months? Well, because I'm not marrying these damn things. I'm just making a profit. That's it. I buy, grab a little percentage out. Thank you very much. I'll see you in 90 days. They trade every 90 days. All right, let me finish up my story here. So, the 5 rules. Never buy something you don't want to hold long term. Just doesn't make any sense. Never sell at a loss. Again, defeats the purpose. Okay? Third, make sure the company has a minimum of 20 years or more of increased dividends. People ask me why all the time. Well, I could say what my mother always said. Well, because I said so. For those of you growing up in the 60s and 70s, you know exactly what I'm talking about. Why? Because I said so. No, not really. Now, the reason why I only do dividend stocks. All right, question. What about option trading? You have ever had an issue trading with a guy that you came in? Sticks, dogs, I do option trading. That is part of this. That's a major part of this strategy. You're new here, because I can tell by the name. I'm really good with names. Okay? Now, you're new, so sit back, chill, relax. It's very simple. Never buy something you don't want to hold long term. Never sell at a loss. Make sure the company has 20 years or more of increased dividends. And here's this just for you. You ready? And has weekly options. Why weekly options? Well, because I want cash flow on a weekly basis. Palush, I am new to trading. Well, kick back, relax, see if this makes sense. Let me finish up my little story here, okay? Never buy something you don't want to hold. Never sell at a loss. Make sure it has 20 years of increased dividends, weekly options, and make sure the numbers work. Just finish the basic. Okay, cool. What do I mean by make sure the numbers work? Pulling up my favorite, because I don't like that one. Here's my favorite right here, Macy's. Now, what I mean by make sure the numbers work, these numbers are what they are. There's no arguing about it. It's the last trade of Friday. What's the bid? If I sell it for, what's the ask? What can I buy it for? How much volume was on Friday? What was the high? What was the low? What was the close? All those numbers are, you can find them anywhere. Do you think Macy's will go through the Macy's? Okay, it makes no sense, Mark, but I'm not quite sure what you mean, but let's talk about that in a second. So when I say make sure the numbers work, what can I buy it for? Now, I'm doing covered calls, one of the safest trading strategies that is. You buy the stock, you sell an option. Two totally different financial, what do you want to call these damn things? Tools, okay? Stock is a place where you buy a portion of a certain company, okay? So whether or not you feel the company's going to do well, get a return on your money, whatever the reason you're here for investing. Now, options are, well, you get your call option, you get your put option. Options are nothing more than an opportunity for someone to take advantage of a situation they have, that they think, whatever it may be, through the buyout. Yeah, okay, yeah, I get you, Mark. We are not 100% sure if the buyout is actually going to go through. However, Macy's is over 100 years old. Even if there is a buyout, what's the plan for the new management? That's questions we don't know yet. But you're buying a brand name, 100-year-old brand name. I think people around the world know who Macy's is. Okay, so you have to have something up your sleeve if you think Macy's is going to let go of Macy's without knowing whether or not the person or the company buying them has some kind of, I don't know, brand loyalty, whatever. All right, so let's finish up. Hey, Doc's here. So as I'm saying, the safest trading strategy that I know of is a covered call. You buy the stock, you sell the option. If I buy the stock, what am I buying it for? If I'm selling an option against it, what am I selling and how much am I getting for that? Okay, so if I'm buying it 1974, first thing Monday morning, I'm selling somebody the rights. Now, call option is the right to buy, not the obligation, on a certain stock, right here at Macy's, at a certain price, strike price, by a certain day, 12 July 24. Okay, now I like the weeklies because weeklies are 52 times a year. I can get a check every single week. Okay, so the idea, can somebody let me know if, I forgot to check, somebody let me know if the YouTube channel is working. This screen is live on YouTube, that way you can see the numbers easier. Calls or puts Monday. You teaching options? Yes, we are. Who said that? A-Town LLC. Okay. Puts and calls. Just join what I missed. You didn't miss very much. We're just getting started. YouTube is working. Thanks, Doc. Could you punch a mailbox? I'm not quite sure what that means, but okay. I have no reason to punch a mailbox. It's working. Thanks. All right. So, there you go. 5 criteria. Safe, simple, predictable, consistent, no way to lose. That's the 5 criteria that I had to come up with. 5 rules. Never buy something you don't want to hold long term. Never sell at a loss. 20 years of increased dividends, weekly options, and make sure the numbers work. Great. There you go. There's your start. Do you think Walgreens hit the bottom Friday? No way to know. Turned 800 into 2200 this week thanks to PLTR and the Q calls. Well, alrighty then. How many times a week are you here? Well, Palouche, I've been live every single day since January 2nd. 2.5 hours a day. There was a couple of days I missed. I missed 2 days. I was sick once. Had to take someone to the hospital the next day. And then I broke my collarbone. That was a very short night. I got the flu. That was a short night. But, at least I showed up. All right. So all that information, I'm a nobody. I don't know anything. I'm just showing you what I taught my 9-year-old daughter. Simple, safe, predictable, consistent. It just so happens to work 1% per week. It comes to over 50% per year. And if 50% per year is not enough for you, then you're in the wrong place. I mean, I don't want you guys wasting your time if 50% is not enough for you. What do I think of NVIDIA? No. Starbucks. Let's take a look at Starbucks, because I do have some Starbucks. Now, why am I saying no to NVIDIA? You might want to know why. Well, NVIDIA, number one, it was $1,200 a couple of weeks ago. Now, The fundamentals of the company did not change at all. Okay, so why did they go from 1,200 down to 100? Well, because they did a stock split, because they wanted more people to buy the stocks. Okay, fine. But NVIDIA has a dividend of 1 cent. Okay, so when the stock was at $1,200 a share, they were still only paying 1 or 2 cents. Employees retired. Okay. I need help on my Forex. Okay, sorry, dude, I don't do Forex. Wave Runner, James, what percentage do you make on your other accounts? Well, here's a question for you, Wave Runner. Ask yourself this. If I'm here every single night sharing with you a trading strategy that makes about 50% per year safely, now all my trades are visible online so you can actually see them. So if I'm giving that away for free, what is it that I have up my sleeve in my other accounts? I'll just give you a quick idea. I dropped Apple, okay, out of my other account because it was only giving me, are you ready for this? It was only giving me 4% per week every week. So imagine that, 4% a week every week. And I dropped it because it wasn't high enough. So if I'm getting 4% a week on a stock that I'm dropping because it's not high enough, what do you think my other trading strategies are? Now, I give this one away for free because, yeah, I'm looking for some serious investors. I'm looking for people that want to, and I'm not talking about every single day, hour upon hour upon hour, sitting in front of your computer. No, this is like 10 or 15 minutes a day. That's it. So I have a trading group in the mornings where we trade Monday, Tuesday, Wednesday, Thursday, Friday. Okay? Monday, Tuesday, Wednesday, Thursday, we're on at 9 a.m. until about 10:30, 11, until you guys stop asking questions. Because out there until you guys finish asking questions. I don't care. I got nothing else to do. I'm retired. So Fridays we're on at 5 because we're on at 3 so that we can be available to make sure all our positions are good. Okay, so yeah, so I have an ulterior motive. I am looking for people that want to trade consistently with me, and I do have a lot of trading strategies that I don't teach here. I only do that for the morning trading group. Living your best life. I'm getting close, okay? Because I have a few more things up my sleeve that I'd like to do. And we'll get to it because, like I said, I committed myself to this for the next 6 months. All right, so I've done 6 months so far. If you think about 6 months, 2.5 hours a day, every single day, that's nuts. And I'm going to do it for the rest of the year. So let's say hopefully we'll see how many people actually stay for the whole year. There are actually some people here that have been here since January, and they just keep coming back over and over and over again. Hey, RJ30, how's it going? Back again. Do we have to be invited to that group? Now, anyone can join the morning trading group. It's $100 a month. You can ask me any questions you want. If you think about it, you got someone who trades and makes 1% a week consistently. That's over 50% a year in this one account. Now, I have other accounts that go a lot better. If you think that information is valuable, yeah, sure, join. But there's a difference between the morning group and then the inner circle, because the inner circle is those people that actually want to get into the programming, getting into the consistency and predictability of the trading strategies. Because if I'm only going to be trading for 15 to 20 minutes a day, and I want to make my 1 to 5% for the week, great. I don't want to sit in front of the computer. That's not the thing. I want to keep it simple, safe, predictable. It's kind of like common sense. Coffee break logistics. Will you trade on Monday? WBA, Kohl's, Mara, and Ford. Let's write those down. WBA, I already have some. Kohl's, KSS, I already have some. Mara, I don't have any Mara at the moment, but we'll take a look at it. And Ford is off the list for a couple of days, for a couple of weeks. HIMX. Don't forget Starbucks. We're going to get to Starbucks. I have some Starbucks, S-Bucks, yeah. Now remember, I have 6 different trading strategies. I only share 2 of them with you guys. So if the 2 that I'm sharing with you, one makes, well, we'll get to that in a minute. I'll show you. HIMX, eat candy sticks. I've never heard of HIMX. Okay, is that going to be one of those what the hell were you thinking type scenarios? Let's see if it is. HIMX. Yeah, that's a no. Okay. Candy sticks, no. Are you trying to get a few people together to start a hedge fund. Actually, I am going to be starting a hedge fund, okay? But it has to be a specific hedge fund and it has to be done in a certain manner. Later, Wave Runner. Okay, so HIMX is a no. Let's see how really bad is a no. Okay, so go here. HIMX. Okay. All right, here's one of the minor flaws I'm having with HIMX. Other than the fact that it's a monthly, which is a no. Number two, 3.7%. Now, I just came and told you I can show you ways of getting 1% per week. That's over 50% per year. Why would you want to put your money in a company that gives you 3.7%? Okay, 3.7. Let's find out what the dividends look like. All right, how often and how consistent are they with their dividend payments? Okay, so they pay a dividend once per year. All right, so they started paying in 07. So what is that, 17 years? So 17 years of dividends. Now, she goes from 20 to 30 to 30, 20 to 35 to 30 to 25, 24 to 6 to 25, 27, 30, 13, all over the place. Yeah, there's no consistency there. Okay, so I just gave you 3 reasons why I don't like, oops, wrong account, wrong account. All right, so I just gave you 3 reasons why I don't like HMX. Now let me give you a 4th. You ready? Here we go. Number 1, it's a monthly. They don't make enough money. They just don't. What's a big factor in the dividend stocks you buy? Ooh, eat candy. Hold that thought for 1 second. Waste Management Republic Services, Clean Harbors. What's your thought on Waste Management? Waste Management's an excellent company, WM. We'll take a look at that also. So, eat candy. The factors for the dividend stocks that I buy, simple. It is so simple it might give you shivers. It's actually that simple. Number 1, 20 years or more of increased dividends. Weekly options. That's it. It is actually that simple. 20 years of increased dividends and weekly options. Now, we checked this number last week. If you don't believe me, you can check it yourself. There's 9,567 companies you can choose from at any time when you want to invest in the stock market. So how do you pick? Okay. Now, HIMX, I'm kind of thinking, what the hell were you thinking when someone sold you that turd? That's just my opinion. You may work there. I don't know. You may have a relative that works there and say, hey, this is a good company. Jump into it. Okay, fine. Okay, the dividends are all over the place. No consistency whatsoever. They've only had 17 years of increase of dividends, not increase. They only pay once a year, and they're monthly. So monthly means I can only do it once a month, which is 12 times a year. Now, weekly optional stock, I can do every single week. Now, I'm no mathematician. I already told you that earlier. I'm not an accountant. I'm basically a nobody. But I do know 52 checks is better than 12. And it's not the size, because if you do the numbers, take a look. 7, looking at the 8s, 20 cents. Okay, so that's 2%. Great. But I got to hold it for 2-3 weeks. And if I'm wrong, I got to hold it for another 4 weeks. And if I'm wrong there, I got to hold it for another 4 weeks until it hits my target. Yeah, no thanks. The money just doesn't work. Okay, Vegas nights. You want to do Apple, huh? We'll take a look at Apple a little bit. Now, I look at these as you guys ask. I put it down in my little book, okay? There's my little book. This is this week so far. This is this weekend. All right, this is last week, the week before, the week before, the week before, the week before, blah, 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 blah. There's a lot, okay? So I write them down. I go through them one at a time, okay? I don't want anyone to feel like they're left out. 86, we looked at Pfizer last night, and you were here last night. Nothing has changed from last night to tonight. But just to entertain those people who haven't seen Pfizer yet, we'll take a look at Pfizer again. Right? Now, RABWLP. BWLP. That's probably going to be one of those what the hell were you thinking stocks. Okay? BWLP. Exactly what it is. It has no options, number one. It's very spotty. Okay, look at all the gaps. Gaps, gap, 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 gap. Yeah. Do they even have dividends? Samsaki, what are you thinking? ET, huh? Energy transfer. We'll take a look at energy transfer. We'll write it down. All right, let's go back to the list. So basically, it's really not that difficult, ladies and gentlemen. 20 years of increased dividends and weekly options. That's the only two criteria I'm looking for. Only two. It shouldn't be that difficult. Think about it. Two criteria and two criteria only. 20 years of increased dividends. Why do you think I want 20 years of increased dividends in any company that I invest my money in? Well, number one, a dividend is a portion of the profits the company makes. So if the company makes a profit, well, I'm entitled to a portion of that. Hey, Jolly, how you doing? So as the company makes money, I'm entitled as a shareholder. So once you buy the stocks, that's a share or a shareholder. So you own part of the company. I'm doing good. Awesome. So if I'm going to invest any of my own personal money, I want to make sure that I am giving it to an establishment that is profitable, number one, has historical performance, number two, and consistently increasing their profits. Okay, so you're looking at companies, or I'm looking at companies with 20 years of increased dividends. What does that mean? That means 20 years consecutively, year after year after year after year after year. They're profitable every single year. Why would I want to put my money into a company that's not profitable? Okay, so let's say hypothetically you got a company like Tesla. It's profitable, but they don't share their profits. Somebody wants to look at Disney. All right, Mr. Montana. Okay, I'll take a gander at it. Glad you're feeling better. I still get that cough, doesn't want to go away. But the last time I had this thing, the cough stayed for like 2 or 3 weeks. All right, so as I'm saying, 20 years of increased dividends, weekly options. That's the only criteria I ask for. If we can, just stay on task for those two little minor tidbits. All right. Now, where did we end up last night? NNE is the one we ended up last night. NNE. Yeah, that's a no. Ooh, Paramount. P-A-R-A. Jolly likes Paramount, don't you, Jolly? I saw you there in the in the crowd. Ego. Yep, I have a nasty ego. It's a horrible thing. Low battery. Uh-oh. Why do I have a low battery? It's plugged in and it's charging. SoFi in the next 5 years. BPJ94. All right, I'm going to pick on you right now. SoFi, really? SoFi, $6.50. Check it out. A year ago, she was at $11.74. Okay. The last couple of weeks, she bottomed out at $6.19. And she has weekly options. Delightful. First thing I want to look at, so I'm going to buy it at $6.47. The $6.50s are going for 12 cents. That's just a little bit less than 2%. That's awesome. But let's really pick on SoFi for a second. S-O-F-I. SoFi. All righty, check it out. SoFi Technologies. Check this out. You ready? No dividends. Why would I want to invest my money in a company that doesn't pay dividends at all? Think about it. Why? I can't get a yield out of them. I'm just going to put my money there and just expect them to do something? Well, let's take a quick look. It's at $6.52. Let's look at some statistics on SoFi. Fiscal year, profit margin, negative 8%, 52-week range, negative 25%. S&P 500 52-week change up 26% from last year. 52-week high 1170, the low 620. Average shares 38 million. Return on equity -3%. Return on assets -0.66. Net income via the common negative 218 million. We talked about last night. I tried to reply. Then it told me that the account was suspended. Derek. Well, Derek, just to let you know, I'm not sure who I talked to last night, because I did talk to somebody last night, and I don't think it was you, Derek, because I tell people, send me a number and I'll give you a call. SPY is a good monthly payout. Thoughts? All right, we'll take a look at that one, but I can tell you right now, it's going to be a no. All right. Is oil companies the best dividend stocks? Brazo, Foreigner, his favorite is Macy's right now. Yep, maybe it was a copycat account. Yeah, we're up to 24 now. 24 people pretending to be me. I am Warrior Grandma. That is a cool freaking name, Warrior Grandma. Sounds like a Gen Xer. Grew up in the 60s and 70s. All right, so just followed you. Okay, cool. All right, so let's continue picking on SoFi. The book value is $5.51. All right, so that's not too outrageous. But they don't pay a dividend, so why would I be even interested in that company? ENB. Yo, Johnny, ENB, never heard of him. ENB. You know, Johnny, what I say about company I never heard of? ENB. Enbridge. No. All right, Johnny, take a look at it. No, it's a monthly. Why don't I like monthlies? Because monthlies just don't pay enough money. Now, when I say 20 years of increased dividends and weekly options, well, I say that because I want to get a weekly cash flow, not monthly. I can't get weekly cash flow from a monthly because he only does it once a month. A weekly is, every single Friday. I can get a check every single week by doing covered calls every single week, and it gets me a safe, predictable, consistent 1% per week. So if you're looking for something more than that, you're in the wrong place. ENB, sorry, Johnny, that's a no. Derek. Uh-oh. All right, hold on. It was me. You asked me how motivated I would be on the scale from 1 to 10. No. I just got followed from the fake you. All right, Sherry. Hey, Sherry, how you doing? Ask Sherry. I talked to Sherry last night. Was it last night, Sherry? I talked to you the night before. Sweet girl. All right. So, Derek, I can't help you out with that. Because when I say drop me your number, I will personally give you a call. You know what I sound like here. Because you're here and you're watching me live. You know what I sound like. When I say send me your number, I will give you a call. I will give you a call. Okay? Now, I said I'm going to be here every single night for the rest of the year. Well, we will see how I am with my word because I've been here since the beginning of January. And I've only missed 2 days. A couple of days I did call it quits early because I'm refusing to admit that I'm getting older and I do stuff that I probably shouldn't be doing. So I hurt myself often. Is BND a good stock for dividends? Michael, BND. Now, let me explain why. Number one, look at the choppiness of the chart. When I say choppiness, gap, 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 gap. It did lots of gaps. There's a lot of holes in that chart. And take a look. Look at all those holes. Where are all the traders? Okay, traders will trade consistently. Why is it dropping? Where are all the, why? That's one. We can't check out the volume. Wait a minute. Yes, we can. Hold on a second. Let's see. Why can't I see all the volume? There we go. Okay, 4.2 million on an average. Okay, so that's that. The numbers, I don't like monthly, so they don't usually pay, but let's see what they do for dividends, BND. BND. The yield is 3.39. Michael, are you seeing this number? Now, this screen right here is live on YouTube, so that way you'll be able to see all these numbers. Okay? I'm not making this crap up. Look at this. You're putting your money into a company that's paying you 3.39% for the year. You could put your money in government bonds, and government bonds are paying 5% per year. There are some savings accounts that pay better than that. That's just a summary. Hold on. Let's go and see what the dividends look like. All right, they pay every month. Lovely. How far back do they go? Ooh, check it out. They go quite a ways back. All right, 14, 17. Okay, so it's 17 years. 17 years of dividends. Well, let's see if they increase every year. It was 13 to 26, to 23, to 30, to 29, to 28, to 29, 31, 26, 30, 29, 30, 28, 29, 27, 30, 27, 27, 26, 25, 24, 23, 22, 58, 21, 22, 20, 28, 28, 19, 18, 17, 16, 17, 18, 16, 17, 18, 21, 34, 17, 21. The guys are all over the place. Okay, 18, 17, 15, 13, 27, 14, 13, 15, 16, 17, 18, 19, 20, 21, 22. Okay, there's no real consistency there, but, you know, they got 17 years of increased dividends. All right. If that's okay for you, and they're paying 3.something%. If that's what you're looking for, Michael. Okay, I like 1% per week. Okay, call me nuts if you want. You know, 1% a week is 50% a year, but apparently you're liking the idea of 3.3% per year. Doesn't make any sense to me. You got that, Johnny? Alrighty. Uh-oh, I missed some. Okay. Gotcha, much appreciated. Derek, yeah. So Derek, seriously, you know, I feel sad, and it does happen a lot. I do get emails from people upset with me because I stole money from them via some Telegram, Instagram, weird stuff about some cryptocurrency. Yeah, no, I don't do any of that. I don't do cryptocurrency. I don't do Forex. I don't do futures. I don't do Telegram. I don't do, what's that other one? WhatsApp. I don't do those. Okay, I tell you, if you want to talk to me, send me your number right here. Send me your number here. I will call you back. I check that stupid account 2 or 3 times a day. All right, so Michael, that's my my take on BND. They're not consistently increasing. Okay, they're scattered with their dividends. They're monthly, so they don't have the opportunity to get a yeah, you can get a check once a month. Great, fine. 3.38. Sorry, Michael, I can't get behind that one. But that's just me. If it works for you, more power to you. Recommend companies for weekly dividends. All right, Eric McFeathers. I never said anything about getting weekly dividends, okay? I said dividend investing for weekly cash flow. Dividend investing for weekly cash flow, okay? Now, what do? I take, excuse me, I take dividend-paying companies, specifically those that have increased their dividends for a minimum of 20 consecutive years. Because I want to make sure I get more and more money every single year. The stock drops, well, I want to make sure I'm getting a higher rate of return on a consistent basis. That's why I like 20 years or more. Now, 20 years or more of increased dividends, there's over 300 companies. There's no possible way I could invest in all of them at the same time. So what I do is I rotate them. I put them on a little merry-go-round, Ferris wheel, Rolodex, revolving door, whatever you want to call it. Now, the year is broken down into 365 days, 52 weeks, 12 months, blah, 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 4 quarters. January, February, March, quarter 1. April, May, June, quarter 2. July, August, September, quarter 3. That's where we are right now. October, November, December, quarter 4. Okay, so all these 300 stocks that I look at personally, they fall into the calendar in a manner such as, let's go right here, here we go. Okay, in a manner that looks something like this. So the first week here, I'm looking at ConocoPhillips, John Deere, Fifth Third Bank, Mendelez, Nucor, U.S. Bank, and Cardinal Health. Those are the only ones I will look at that week, because stocks have a tendency to go up just before the dividend. Each one of these little dots represents the EX date of a company. Now, what does that mean? Well, there's 4 dates to remember with dividend stock companies. Date number 1, the announcement date. That's pretty clear. That's when they announce, hey, we're this profitable, we're paying out this dividend. Date number 2 is the EX date. The last day the stock trades before the dividend is paid. That is represented by all these little green dots with the names right next to them. Procter & Gamble, Caterpillar, Lowe's, Ford, Bank Mellon, Pfizer, Kimberly-Clark, Intel, U.S. Steel. These are companies you've heard of. This is my personal list. Okay, these are the companies that I buy. Okay, you probably heard of every single one. Look at this one, Comcast. Comcast is not a 100-year-old company. They're 60 years old. Okay, they were incorporated in 1964. So why am I looking at a company that's not 100 years old? No, they got 64 million people paying them every single month. That's why. Okay, what about monthly expires in a week? AMC. I'm not 100% sure what you're trying to say. There's a difference between weekly option and a monthly option. A monthly option is the 3rd Friday of every month. Weekly options are every Friday. So I just don't like weeklies. I mean, sorry. Sound like Barty, not knowing what to say. I just don't like monthlies because they just don't pay the same amount of money. Okay, I'm looking for safe, predictable, consistent 1% per week. I cannot do that with a monthly optionable stock because they only pay once a month. All right, that being said, let's take a look at the next company on the list, Paramount. Hopefully that answered your questions. Yeah, so BND is a big fat no. No. Will you trade on Monday, WBA, Kohl's, Barrett? Okay, coffee break. I'll take a look at them on Monday. Anything you've got your eye on. I really like Macy's myself. Nostalgic Tunes. I love Macy's. Macy's is my favorite. Take a look. Take a look at Macy's. Now, first thing I always want to see is what am I paying for it? 1974. What can I sell it for? Well, I can sell the 1950s. That's giving me a nice return. I can sell the 20s. That's giving me a nice return. I can sell the 2050s. That's still giving me. All 3 of those are giving me over 1% return. I can even do the 19s. I think. No, the 19s don't quite cut it. I would ask for a little bit more. I like to get 1%. I'd like to do the 19s because it's the furthest in. Okay, but take a look at the chart. Now I want to look at 5 things. You're going to see a lot of 5s in my trading strategy. Okay, 5 criteria, 5 rules, 5 items to look at in the chart. Number 1, the high of the year. Number 2, the bottom. Number 3, where was it? Okay, now this is a 1-year chart, so where was it a year ago? If I'm looking at a 30-day chart, where was it 30 days ago? Okay, so high, low, where was it? Where is it? And which direction is it going? Mr. Wellington. Okay, watching over there on Facebook. Cool beans. What's your best stock for dividends and are you hold for years? All right, World mindset. The longest I've ever held anything is 9 months. So when you say for years, you're not talking my language. Okay? I'm a weekly trader. I don't know about you. My bills come due every single month. Okay, and they all don't come due on the exact same time. It's, I'll get 1, 2 bills this week. I'll get another couple bills next week. Get another bill next following week. They come every week. So I personally like weekly cash flow. For that, it has to be weekly optionable stock. And so far this year, my best stock is Macy's. NB, is that chart on the 1-day time frame? NB, yes it is. Issa Mick, you're welcome. Leroy Jenkins. Can I look at ET, Energy Transfer? Well, let's take a look. Let's finish up with Macy's first. Okay, so here's the high, here's the low, here's where it was, here's where it is, and that's the direction it's going. Great, I like the 1 year, but what I'm mostly interested in is what's going on now. What am I going to plan now? So first, it's the 1 year. Second, the 90-day. Then the 30-day. Then seasonality. And then the end of the year. Yeah, so a year ago, Macy's 1605, a year ago. Bottomed out, hit the bottom twice at 1052, once in October and again in November. Finished out the year at 2010. Now, from the beginning of the year, look where we are. Basically, here's the bottom, here's the top. This baby just channeled for the whole year. I love channeling stocks because you can buy high. Sell high, buy low. Okay, so here, sell, buy, sell, buy, sell, buy, sell, buy, sell, buy, sell, buy, sell, buy. Okay, that's simple. All right, so that's the last 90 days. I mean, that's since the beginning of the year, 6 months. Last 90 days, that would be March 5th. Here you go. That's the last 90 days. The high, the low. Where was it? Where is it? What direction is it going? Okay. So let's go a little bit deeper. I like looking at the last 30 days. The last 30 days gives me a great indication of where it's going next. Right? Ooh, we got 25 questions I'm missing. Yo, Johnny, were you looking at AT&T? Really? Ooh, okay, that was my toe. So look at the last 30 days. Here we are 30 days ago. Okay? Up, down, up. Where do you think it's going to go next? Especially with this big, huge gap. Gaps have a tendency to fill. That's at a 30-day high. What happens at 30-day high? Usually 30-day highs, you have 30-day high, you usually have profit taking. So more or less, that thing should be coming down on Monday. But they have that news, that buyout. Okay, so maybe it'll go up, maybe it won't. I don't know. But what does it usually do this time of year? Usually this time of year, we take a look at the seasonality. Now, for those you don't know what seasonality is, it's January 1st to December 31st. Okay, winter, spring, summer, fall, all that crap. The blue line represents the movement so far this year. The red line represents 10 years worth of data. How has the stock reacted over the last 10 years? What can we expect? Well, everything being normal, which they ain't. Okay, here's where we are right here. This is what it shows. She should dip in a week and then go back up the next 2 weeks after that. That's historical performance. That's what it's done over the last 10 years. Does that guarantee what it's going to do next? No, it doesn't guarantee that at all. It's just saying that's what it normally does as business as usual. And we know it's not business as usual, especially during an election year with the weird crap that's going on. That being said, let's go to the next one. So I am waiting for Macy's to come down. I'm waiting for that profit taking to be done. You see right here? There's going to be profit taking. And once she gets back down to the 18 area, then I'll jump back in. So that'll be probably another 2-3 weeks. So I'm going to write Macy's down for 3 weeks away. All right, so I'm going to take a look at Macy's in 3 weeks. Can I do ET next? Energy transfer. ET. ET's a no, right off the bat. Why is it a no? Look at where we are. Okay, shoots on up. She's coming down. Why would I want to jump into a stock that's coming down? Okay, that was pretty quick, wasn't it, Leroy? But you know what, Leroy? If you really like energy transfer, okay, she's at a high now. She's going to come down. Once she comes down, then she can turn on and go back up. That's like 2 weeks away. So you got 1 week here, another week here. So in about 2 weeks, be ready to jump back in on energy transfer. So let's write energy transfer down for 3 weeks away. All right, next on the list. What is one that can give 50% a year? Well, Michael, it's Macy's. So far, I've made over 20% off of Macy's, I believe, already. Hold on, let me just do a quick check. Quick check. Macy's, 16,000. So I made 16,000 off of Macy's this year in that particular account. Okay, energy transfer. Yeah, we're going to pause on energy transfer anyway. And it's not just one stock, Michael. It's a bunch of different stocks. Who's paying 50% a year, every year? Okay, you guys are jumping the gun, making shit up as you go. It doesn't work that way. I said I make, through my personal trading, 1% per week. That is over 50% per year. Let me see, my website is almost back to normal. Okay, here it is, the 10-minute trader. This is the new look for the 10-minute trader. Okay, and here it is right here. And there you have it. Yeah, I don't know how to get rid of that stupid thing in the background. Okay, so account number 1 is up 31% so far. Account number 2 is up 69% so far. Here's all the trades from the beginning of January till now. Every single one of my trades is posted online with the average profit for the week. Okay, look at it. Week 18, 2.6%. Week 19, 1.24. Week 20, 0.71. Week 21, 1.2, so on and so forth. They're all there. You can take a look. Yeah, and I really should have done that. Damn it. All right, anyway, let's get back to where we were. Here we go. All right, so ET is going to be a no. FSK. All right, Les, I've never heard FSK. You know what that means? If I've never heard of it, FSK. That's a no. It's a no, Les, because it's a monthly. And also, you are not paying attention when I say I don't do monthlies, because monthlies just don't pay like a weekly pays. A weekly pays 52 times a year. And if I can get 1% on a weekly, why the heck would I want to deal with a monthly when it doesn't give me? It'd have to give me 4 or 5%. And they usually don't. And then, if they do, I got to figure out where's the stock going to be in 4 weeks. That's not that easy to do. All right, D. Wish Cash App had dividend stocks on it. All right, I'm a little lost there, D, but okay. Laura. Whoops, what is that? Laura Design and Printing. Well, hello there, Miss Laura. All right, what do you know about Archer Aviation? Absolutely nothing. 86 says it doesn't have a dividend. It makes sense. Oh, someone sent me a gift. That was very nice of you. MSTY, Misty. Really? I never heard of them either. MSTY. Who wants to make bets it's going to be a no? MSTY. It's a no. Okay? Look, it's a monthly. 24.70. I'm looking at the 25s. It's paying 50 cents. 55 cents. That's 2%. Okay, 2% for 2 weeks. Great. Oh, hell no. Look at this. She's in a free fall. So if you really like it, keep your eye on it, because eventually that gap will fill, and this will find a bottom, turn around, go back up if it's a halfway decent company, which I know absolutely nothing about them whatsoever. Okay, I only do companies that have increased their dividends for 20 consecutive years because I don't want to give my money to just anybody. Uh-oh, missed some. Can't do clobber, buy low, sell high. That's right. Player, Q, Q, Q. How about we go, no, no, no. That's what the Q's are getting us. Number one, it's $500 a share. Number two, how much higher do you think it's going to go, brother? Okay, it's at the high of the year. Okay, the idea of making money in the stock market is to buy low and sell high, not buy high and wait for it to go higher. I just don't play the game. I see a bull flag. Well, alrighty then. What I see profit taking waiting to happen. Because look, she's down here at 420. Now she's over at 5. That's an $80 increase on a $400 stock. That's a big jump. Okay, if you think people aren't going to say, hey, I'm taking my profits and jumping ship, they do it every day. It's not a profit until you take it. And, by the way, in case you didn't know, nobody ever went broke taking profits. I know, doesn't that sound strange? Nobody ever went broke taking profits. I'm in around 5. Well, at the Q's, I doubt it, but okay. Walgreens, Jerry. Did we look at we didn't look at Walgreens today so far, but you know, Jerry, we looked at it last night. Nothing's going to change between last night and tonight. But the last 30 days for Walgreens, okay, kind of channeling to the side, and then she drops. We thought this was the bottom. That was like a month ago. Oh, yeah, about a couple weeks ago, 3 weeks ago, 4 weeks ago. Hey, she drops here. This is where I bought some more, right here, the 1250 area, but she kept going down. Now we're at 11. Okay, how low is it going to go? Well, it's going to go as low until we, the investors, stop running away. All right, so they said they're going to close some stores. Big deal. They get 8,500 stores. They can close a few and still be okay. Okay, they're getting rid of 450 stores, 150 here in the U.S., 300 over in England. Well, that's the report I read. You know, last week I read 4 reports and they all said something different. The latest report I read, they're getting rid of 400 stores, 300 in UK, and 150 here. They get 8,500 stores. I'm pretty sure they're going to be fine. They're over 100 years old. Okay, they've been in business for over 100 years. Yeah. Cut off the what do you call it? Cut off the bleeders. You know, get rid of the non-performers, however you want to look at it. The company is not a charity case. We don't go and open up a billion-dollar business to give away money. No, they don't do that. They go into business to make a profit. Okay, so let's stop making a profit. They're cutting out all the low-performing stores. Fine, you're not doing good, you're done. It's actually that simple. I don't know why people make it more complicated than it needs to be. Thoughts on ARR for monthly dividends? My dudes. That's a cool way of spelling that. ARR. No. Sorry, dude. It's a monthly. What does that mean? I can only do this once a month. It means I can only collect. Okay, so you're collecting a dividend every month. Cool. Now I can collect a dividend and an option premium. But how are their what do you call those? How are the dividends in ARR? ARR. Wow. Holy shit. All right, dude, you ready for this? Who said ARR? All right, my dudes, you ready? What the hell were you thinking when you bought this turd? Seriously, look at it. 2010, $16 a share. That was the dividend they were paying out. $16 a share. That's great. Okay? Couple months later, 14. Okay? Couple months later, 4. They go from $16 a share down to $4.80 a share. Explain to me how that's supposed to be good? Okay, so from 480, oh, And she dropped it to 440. Uh-oh, she dropped it to 4. Dropped it to 360, 320, 280, 2, 160, 165, 110, 95. Now we'll blow $1. And you think this is good? Seriously, dude, what the hell were you thinking when you bought this piece of crap? All right. Let's take a look at something else. Oh, now I'm showing you safe, predictable, consistent 1% per week. Now, I'm no genius, but I do know 1% a week is 50% per year. Look at this turd you're thinking about. 14.6. Great. 14.6 is better than a lot of companies are dishing out. I mean, it's not that bad, 14%, if you like 14%. I like 50%, but that's me. What weekly stocks do you recommend? Andrew Rivera. Well, you're new here, Mr. Andrew. My suggestion is to sit back, relax, learn something before you jump in. Mr. Kardashian, back again. How are you, sir? Uh-oh. Greens, flag, yep, I saw that, a couple of these questions. SYT. Oops. Do we have a website or Discord? I have a Discord, but that's only for the paying members. Okay, I also have a trading group that's for paying members also. What I'm teaching you here, 50% per year. If that's not good enough, I can't help you out. Okay, it's a simple trading strategy, safe, predictable, consistent, 1% per week. If that's not enough, I suggest there's other strategies that I do have. Okay, I'm giving you away this one for free. It makes 50% per year. What do you think I have for the people that actually in my trading group that actually pay to be in the trading group? I had to cut Apple off because it was only giving me 4% a week. Only 4% a week. I had to cut it loose because it wasn't quite enough in the different trading strategy that I have. SYT. All right, Bill Kardashian. I really don't care if it was gold plated. Okay, I like 1% a week. That's 50% a year. Now it takes me 10 or 15 minutes a day to do my trading. Most people spend more time planning their barbecue or planning their social media events than they do in their personal finances. Okay, if you don't have 10 or 15 minutes a day to take care of your personal finances, especially once you get to a certain level. Now, when I say a certain level, all right, the accounts that I look at, they're in the hundreds of thousands. Okay, so at 1% a week, even on a $100,000 account, that's $1,000 a week. And I'm talking 1 hour a week, 10 minutes a day. Okay, that's an hour a week. That's $1,000 an hour. 50% per year on a $100,000 account, that's $50,000. How much am I working? Well, I'm working 52 hours, an hour a week. 20 minutes, 20 minutes, 20 minutes. It's really not that difficult, and I don't know why people want to make it more confusing than it is. All right, Mark McCoy, SYT. No options, that's a no. It's a $3 stock. How can you possibly think a $3 stock isn't paying dividends for 20 years? Come on, dude. Let's be realistic here for a bit. So, Mark, that's going to be a no to that one. AGNC. It's a nice one. AGNC. $9.73. The 10 is going for, am I reading that right? I mean, take a look. Am I reading it right? If I buy it for $9.73, I can sell the 10s for a penny? Yeah, I'm going to say no. Sorry, no to AGNC. What is Walgreens book value? Didn't we take a look at that a while ago? WBA. Yes, I remember. Walgreens book value is actually higher than the stock price. See that? The stock price right here? Now this screen is live on YouTube, so you can open this up on your TV or on your computer, your laptop, whatever. Walgreens is going for $11.26 a share. Let's take a look at the book value. Now, do we understand what the book value is? Book value is if they take everything that Walgreens owns and sell it at a yard sale, liquidation sale, auction, whatever you want to call it, you're going to come to a valuation of $15.80. Okay? Unlike NVIDIA. Let's take a look at NVIDIA for a second. This is one of the reasons why I don't like it. NVDA. Right there, Nvidia, the book value, $2. The stock's like 130, and it's only worth $2. And you guys say, well, what about Nvidia? What about Nvidia? What about Nvidia? I don't give a rat's flying dead rat's carcass about Nvidia. The dividend is 1 cent. Why would I want to do any company that pays a 1 penny dividend? I'm not looking for capital growth. I'm not a young guy anymore. Okay? I'm 60. I don't want to have to go back to work. When did you first buy it? AGNC is amazing. Good for you, Jerry. Ego, when you have time, please. Oh, that you weren't just talking about my personal ego? EGO. Eldorado Gold. Yeah, it's a no. Sorry, dude. Since I heard small articles on them, okay. ARR will skyrocket when they make rate cuts. Dude, really don't care about rate cuts, and I really don't care about ARR. The numbers just don't work for me. Hey, Michael Adrians. Walgreens probably sell the locations at significant gains. Probably, like 30%. Probably. I can't seize. All right. Do you calculate the realized volatility on your own? Wow. So you're making it more complicated than it needs to be. Do I have a Discord or website? Yes, I have both. I'd be happy to pay and make money. Well, alrighty then. Would like to learn. DM me with your number, or you can just go right to my website. The link is not available yet on the website to sign up. I think I'll upload that this weekend. He wants to pay to learn, I think. All right. What is a short-term options and a long-term or long-term investment? Ooh, you're new here, dude. You sure you want to do that this quick? Think about it. Okay, now I'm here every night. Okay, my suggestion to most people, just sit back, relax, and absorb what you're hearing. And ask yourself a question. Question number one, does this make sense? That's question number one. Question number two is, do I think I have it in me to be able to do it? That's question number two. Question number three is, do I really want to do it? Question number four might be something like, well, what's going to happen in my life if I don't do it? There's absolutely nothing wrong with sticking to what you're doing now. Okay, if you're giving your money over to a money manager or whatever, and they're taking care of it for you, fine, if you're okay with it. Okay, now what I try to do, I try to empower people saying, hey, it's really not that difficult. Don't make it more complicated than it needs to be. If a 9-year-old little girl back in 2008 can say, all right, 1 plus 2 plus 3 equals this. If I do this, I do this, I get that. If I do this, okay, it had to be simple, safe, predictable, consistent, and no way for her to lose. I don't see why people can't wrap their head around that. Okay, 5 rules. Never buy something you don't want to own long term. Never sell at a loss. Make sure the company has consistently increased their dividends. Because if they consistently increase their dividends, that means they're consistently profitable. Why would you ever put your money into a company as an investment that's not consistently profitable? You throw money into the wind with a wish and a prayer, say, oh, I hope they do better. Well, maybe if I give them some of my money, they'll do better. No, it doesn't work that way. Okay, if you're consistently profitable, fine. I'll hook my chariot up to your horse. Whatever analogy you want to use. Think about it. Whatever analogy you want to use, just make sure they're profitable. Why give money to a... I'm not going to say that. It's not nice. Bull or no bull, MK? MPW. Johnny, you like MP? I like MPW. MPW. All right. Now, MPW. Right now, it's going at 421. Okay, so the 450s are going for, right, you might be able to squeeze your 1% out of the 450s. But the 4s are going from 26 to 29. You can definitely get you 1% out of the 4s. Okay, great. Well, let's look at the chart. Okay, 5 things I want to see. The high, the low, where was it, where is it, and where is it going? Simple. Okay, so let's take a closer look. A year ago, 919, topped out somewhere 1074, bottomed out in January at $2.09. Wow, take a look at this top. Okay, from the top, look, she goes down, she goes back up, she goes down, and she keeps continuing down. Now we're 2 days to the upside. I love 2 days to the upside. Now, more than likely, I will be jumping into some MPW on Monday because I love a 30-day top, 30-day bottom, 2 days to the upside. What do you think is going to happen after a 30-day bottom and 2 days to the upside? Well, hypothetically speaking, it looks as if it should continue to go up. Okay, here's the actual last 30 days. Okay, here's the actual last 30 days. 30 days ago, $5.65. Okay, Tuesday was the bottom. Wednesday was up, Friday was up. 2 days to the upside. That is an invitation and a half, my friends. I'm going to write MPW down for next week and circle it MPW. And it is circled because I like the way the numbers look. Walgreens symbol, WBA. I have to go. Family time. Thanks again. All right, Trader Troy. This comment is for the room. Well, listen to this guy. Thanks, Trader Troy. You're looking for consistent income stream. There you go. Oops, I missed some. How much did I pay first round? How about eBay? Somebody wants to take a look at eBay. Wow, I'm on Yahoo Finance. Where are we getting the book value? Oh, MB, Yahoo Finance, the book value. You're getting it on statistics. All right. If you come over to the left, you come down. Summary, news, chart, community, statistics, historical data, profile, financial analysis, options, and holders. So you go to statistics, come all the way down to the third or fourth line to the bottom on the left. That's your book value. How about eBay? Now, let's take a gander at eBay. All right, eBay 52.87. Check it out. 52.87. That's what I can buy it for on Monday. I can sell the 53s for 58 cents. That's over 1%. You guys want to see where you can get a 1% company? Right here, eBay. You've heard of eBay. It's not like a couple of that crap you guys showed me a little while ago I've never heard of. I've heard of eBay. A year ago, 44.05. Bottomed out at the beginning of November last year, 37.25. Topped out a couple of weeks ago at 55.27. Finished out the year at 43. Look at the last 2 months. The last 30 days. Here we go. Last 30 days. Interesting. High, low, where was it? Where is it? What direction is it going? Great. Here we are 30 days ago. The bottom was on the 17th. Top on the 25th. She drops. Okay, yeah, this thing is going to the downside. Gonna find a new bottom over here somewhere before she turns around. But it looks like she's gonna get ready to turn around any day now. Because look at the 30-day bottom here. 30-day tops here. She's falling. Okay? Now, Friday was an up day. But we don't actually know what direction it's going till Monday or Tuesday comes along. Kevin, what time in the day do you make your setup, your trades? All right, Kevin, I do a live trading group every morning, okay? I actually have a podcast. Podcast. Hold on a second, where is it? Podcast, right there. There it is. La, da, da, da. Right there. Podcast, Dividend Stock Talk. There's over 900 episodes. Okay? Now, ever since I started the live, I'm not as good with the episode updating as I should be. All right, so that's eBay. What does eBay normally do this time of year? For that, we use a seasonality chart. Remember, the blue line represents this year, red line, 10 years worth of data. Look where we are right now. You cannot mistake that for anything else. That baby's going to go to the upside in the next couple of weeks. Let's highlight that area. From where we are now, from the next couple of weeks, there we go. Okay, check out the little dates. Now, the reason why I have this live on YouTube, so you can see these little tiny numbers. Okay, 7-5, that's where we are. 8, 9, 10, right here to the 24th. It's going to the upside in the next 2 weeks. That's pretty plain and simple, but that's historical performance. That's last year, the year before. Doesn't guarantee that's what it's going to do now. Well, what does? Well, what does is the actual trend. And where's the trend? Well, the trend is she's dropping, okay? This could be the 30-day bottom right here, and she's going to the upside. Or she could go down a little bit further. So it's not a definite, here I am type scenario. If CDX is rolling flat, would you rather have a higher or lower implied volatility? Dude, you really want to complicate things, don't you? Okay, now, Schnondel? That's an interesting name. Schnondel? All right, anyway, yeah. See if I can explain this to you in a manner that you might understand a little bit better. Okay, now, the trading strategy I'm teaching you at this moment, simple, safe, predictable, consistent. You want to make it more complicated, adding implied volatility in the CDX. Well, fine, great. This is a stepping stone trading strategy. It's simple, it's safe, it's predictable, it's consistent. It makes about 1% per week, which is about 50% per year. And it only takes 10 to 15 minutes a day, which is less than an hour a week. An hour a week. Okay, you want me to try to teach a 9-year-old about implied volatility, how to read the CDX, and I can come up with a whole bunch of other stuff that makes money, but it actually confuses a lot of people. I want to keep it simple. Simple, safe, predictable, consistent, no way to lose. That's what I like. And it just so happens to be 50% per year in less than 10 minutes a day. If you want to make it more complicated, be my guest. But I do not teach that here. Here, I want to keep it simple, safe, and predictable. All right? And I have to agree, this little platform here that I'm teaching here, this is just a stepping stone. Okay, but if you can consistently get 50% per year and feel good about what you're doing, yeah, then maybe you can go and start looking at other things to get a little bit more money. But remember, the longer you sit in front of your computer, you're trading your time for money. Now, I trade my time for money, but I only do 15, 20 minutes a day, and that's 5 days a week, my personal trading. This thing here at night is just kind of a hobby. And I just want to share what I know. Help a little people out. MB, Tesla, no. AMD, no. Apple, once in a while. Amazon, no. Humana are all on bull runs. Yes, they are. Are you going to make a play on Delta earnings? You talking about Delta Airlines? What is Delta Airlines? HZO. What the hell is HZO? Uh-oh, I missed some. I missed some questions. Christopher Cook, HZO. You want me to look at something? HZO. No. HZO is a no. Reason? Monthly. Monthlies just don't pay. And I don't know what you guys don't understand about that. He said no to ego. Can you tell me why I'm here? EGO. It's a monthly. That's my answer. Okay, why don't I like monthlies? Well, because they just don't pay enough. And here's the second reason why I don't like it. Here's your 30-day high, your 30-day bottom, she jumps up, pulls back, 2 days upside. It's too high for where it's bouncing off of. It's bouncing off of the 1420, heading out to the 1640. Well, it's at 1583. It's not that far away. You really think it can sustain another 5 days? Now, why do I say 5 days? Because if you're getting in on Monday, okay, the option's not going to expire until Friday. But you're talking, if it was a weekly, but you're talking the 19th of July. That's 2 weeks. So how the hell am I supposed to figure out what's going to be in 2 weeks? She's going to go up a couple more days, and then she's going to turn around and come back down again. So it's going to be a no. Okay, also, it's monthly. I don't like monthlies. And let's see what kind of dividends they pay out and their consistency. What company was this again? I forgot the company name already. Ego. Eldorado Gold. Okay. It's got a book value of $17 a share. Interesting. Summary. No dividends, no yield. It's at 1547. It's got a 1-year target of 1795. Great. Well, it's not telling me how much I'm making. They don't pay dividends. So what the hell would I want to do it for? Yeah, so there's several reasons why Ego is a no. 1, it's a monthly. 2, she's getting ready for profit taking. Okay? And how are you going to figure out where she's going to be in 2 weeks? Well, she can go up a couple more days, then she can turn around and come back down again. So in 2 weeks, yeah, I wouldn't, no. No, and hell no. Okay, Real PA Realtor, we already looked at MPW. Lele, 1% a week, yeah. How are you doing? I'm doing absolutely lovely, thank you. What do you think about CCOI? Tom, I'm going to be the bearer of bad news. CCOI. No. Okay, that's just one. CCOI. Let's see what they're doing for dividends and what kind of a yield they have. 6.9% yield. 6.9. Okay, you're getting excited. 6.9. Okay, let's see the consistency of dividends. All right, let's check it out. 2012, they started paying dividends, which means they've only been paying dividends for 12 years. Let's see how consistent they are with their increasing. From 10 to 11 to 12 to 13 to 14 to 37 to 39 to 17. Wait a minute, isn't that going the wrong way? 30, 31, 35, 42, 34, 35, 37, 38, 40, 42, 46, 50, 58, 60, 61, 83, 86, 88, 91, 92, 93, 94, 95, 96, 97, 98. All right, well, for the past couple of years, they've been increasing consistently, but they didn't start out that great, and there's only 12 years of increased dividends, and it's not consistently increasing. Sometimes it goes up, sometimes it goes down. Okay, but the yield doesn't really thrill me. All right, so the yield is at 6.9%. All right, let's call it 7%. So you get a 7% yield. Now, you're telling me 7% yield on a monthly, okay, a monthly optional stock, and you think that's good. Okay, not a problem. I'm saying no, because I wouldn't do it. Okay, a couple of reasons. I like weekly options. Weekly options, 1% a week, that's over 50%. I'm going to say it really slow so you understand. 50% per year, and you're excited about 6.8. All right, so I can't help you out there, dude. Sorry, Tom. Which company is paying the most dividends? That I don't know. GD, how do you make the decision to pick which premium? Ooh, that's a good question. All right, let's see, GD, if we can figure this out the easy way. All right, if I'm buying the stock for 1974, right, and I'm looking for a safe, predictable, consistent 1%, and the stock is in an upward trend or a sideways trend, whatever you want to call it. Well, first and foremost, I want to do the safest strategy there is. Okay, it's a covered call, buy the stock, sell the option. How do I pick it? Well, 1974, I want at least 1%. 1% 1974 is at least 20 cents or more. 20 cents or more. So what's giving me 20 cents or more? Well, the 2050, the 20, the 1950, the 19, the 18s are giving me $1.10. But what you do with the strike price and the premium, you add them together, and then you subtract what you're paying for it, and that will give you your profit. All right. So, if I'm buying it at 1974 and I'm selling the 1950s, I'm actually getting $20.15 for that. Eunice Temple, how are you doing over there in Facebook world? And Zabeb Rahman is watching. Cool, Zabeb. How you doing? All right, so you add the strike price with the premium, and that's your effective sale price. This is your purchase price right here. Okay, whatever you do, once you step on the merry-go-round, whatever you buy it for, that will forever be your in price. Okay, the only way that's going to change if you dollar cost average down or you sell. Other than that, once you buy it, whatever price you buy it for, that is your fixed price. This over here, the valuation, that changes every single day. We, the buyers and sellers, that's you and me, once we buy and once we sell, we are the buyers and the sellers. We decide what the daily value is going to be. Okay, we do not decide this. This is what the market maker figures out. If I want to buy it at this price, the closest strike price to this one is the one that I like. It's either going to be the 1950, which is going for 65 cents, or the 20, which is going for 44 cents. Now, you add the two together and you subtract what you paid for it. So if I take the 20 cent to $20 and I add 44 cents to it, that's $20.44 per share, my sale price. But the stock has to go above 20. So I don't really like that. I would prefer one that's in the money, which would be the 1950 or the 1850s. The further in you go, the less money you make. Isn't that weird? Okay, so here I'm collecting 44 cents a share, and if it goes above 20, I'm collecting an additional 26 cents. So this is the one I'm getting the most amount of money by. But the stock has to move up. Well, I don't really like that. I like it if the stock doesn't have to do anything, and that would be the 1950s or the 19s, because right now she's at 1964. So if I do the 1950s, I'm losing 24 cents right off the top. So I take 24 cents off of this, and now I'm looking at 41 cents a share. Right? 41 cents a share is more than 2% of $19. And the stock doesn't have to do anything. If the stock goes up, fine. If the stock stays the exact same, fine. The stock can even come down a little bit, and I'll still be fine. That's my ideal. What is better than the 1950? Well, the 19s. Well, because the 19s, if you take 19, you add to 88, well, now I'm making 19, I'm selling for 1988. And I subtract 1974, what does that come up to? It comes up to 88, 74. No, that one doesn't work. It comes up to 16 cents, which isn't 1%. So, the 1950 is the best bet, in my humble opinion. Okay? Because it's already in the money. The stock doesn't have to go up. The 20, the stock does have to go up. And if the stock goes up, you get more of a return. But that's not what I'm looking for. I'm not looking for capital appreciation. I'm looking for safety. The safest trade in this one is buying the 1974, selling the 1950s. Grab that 65 cents. Okay? All right. Hopefully that answers that question. I got 22 more questions. Milady Avalon. Well, how are you? What? I just missed Milady Avalon's question. What are the best stocks for dividends? Ooh, there's a whole bunch of those. Are you ready? You got a pencil, paper, something to write on? Crayon, mascara, cheap lipstick? You ready? Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's list. Those 5 lists. Go to Google. Warren Buffett's list 2024. Dividend Kings list 2024. Dividend Aristocrats list 2024. Dividend Champions list 2024. Dividend Contenders list 2024. Those 5 lists will give you over 300 really good companies that have consistently increased their dividends. Now you are going to take out the ones that do monthly options and just stick with the weeklies if that's what you want to do. If I subscribe, will I trade better? Ooh, Sam's sake. The only thing you're going to get is by subscribing is getting access to information that nobody else gets access to. It doesn't change who you are. Okay, it's a simple strategy. Never buy something you don't want to hold long term. Do you like Macy's? Okay, is Macy's on your list? Is Macy's not on your list? Okay. Do you like Nordstrom's? Do you like Kohl's? Do you like AT&T? Do you like General Electric? Do you like General Motors, Ford, Wells Fargo, Bank of America? This is a question you need to ask yourself, okay? Because it comes down to the 5 rules. Never buy something you don't want to hold long term. Long term is different for everyone. Longest I've ever held anything is 9 months. Why would I want to buy something and hold it for years when they give crappy yields? I'm not investing for year after year after year. No, I'm investing for weekly cash flow. The biggest challenge I find with people doing in this strategy is getting away from the annual percentage rates. Okay, because anytime you talk to anyone, oh, what is the annual percentage rate? What is the annual yield? What is the annual this, annual that? Yeah, I don't do that anymore. It's all weekly. Everything for me is on a weekly basis. It's 1 week after another. Because I live one day to the next day to the next day. I don't live 1 year to the next year. I don't skip over everything. It's 1 day at a time. So I trade 1 week at a time because that's the closest I could possibly get. Well, they do have daily options, and those are just a little too risky for me. Have I bought a plane yet? No, I'm not buying a plane. I was just out looking at them. It's like, do I really want to spend $14,000 an hour for a plane? Are you selling calls? Paul, yes I am. RA, you want to look at ORC? I can tell you right now, ORC is going to be a no. See? No. I've looked at ORC before. I don't like it because it's a monthly. Monthlies do not pay the same amount of money. It's just a waste of time, in my humble opinion. Okay, I have been wrong before. Okay, if you like that, fine, more power to you. It just doesn't work for me and for what I like to do. Are you selling calls? Paul, yes I am. What company is paying the most dividend that you can recommend? All right, Real PA Realtor, I don't recommend anything. I just read the numbers. I just read the stocks that you guys give me to take a look at. Okay, now, this is what we're looking at tonight. All right, this list here, where are we? Okay, this list here. This is where we are. This list. All right, we're down here at the moment. Okay, this is my list from last week. This is the list from the week before. Okay, this is the list from the week before. This is the list from the week before. It goes on and on and on, all the way back to the first week of January from when I first started. Okay, there's a whole bunch of stocks I look at, and most of them, at least the ones that you guys tell me, is a no. What company's paying the most dividends? I don't know. Yo, Johnny, Kohl's. I like Kohl's, Johnny. I actually have some Kohl's. All right, so let's take a look at the numbers for Kohl's. First thing I want to see is, what can I buy it for? $22.29. Well, the $22.50 is going to be the closest, and that's going for 43 cents. That is just a smidge under 2%. Why would I not do Kohl's at 2%? Well, it's all going to tell about the numbers. What do the numbers tell me? And that we're looking at the chart. The high, the low, where was it, where is it, what direction is it going, all that kind of nice, neat, fun stuff. What's the most important thing I want to look at? The last 30 days, because I want to know where this bad boy is going in the next couple of days. Well, look at it. That is an invitation and a half. Do you see it? First off, $22.29. The $22.50s, 43 cents. That's just a smidge below 2%. The high is here, low is here. 30 days ago, we're at $22.50. She drops down to 21. shoots up 24.60, drops back down to 21.40. 2 days to the upside. I like that. There's your invitation to jump in on Monday. I'm actually going to write it down for Monday. Coles. KSS, and I'm going to circle it. If I don't have anything decent that's actually having the dividends in the next 2 weeks, I'll jump into Coles because I like the numbers. Take a look. Okay, it's actually that simple. Coles is on my list. Okay, then I don't know when. Let's find out when do they have their dividend. Let's find out. June. Okay, so they had it a few weeks ago. Oh, sorry, a little tired. All right. So I like Kohl's. They don't have the dividend coming up, but I still like them anyway, and the numbers look pretty good. He doesn't go for companies paying the most dividends, goes for the companies after consistency. MB, thank you for that. Yeah, he's correct. I like consistency, okay? Predictability, consistency. I get my bills consistently. I get my bills predictably. I like to have my money come in the same way, consistently and predictably. I like it to increase. My bills keep increasing, so why can't my income keep on increasing? Merck, you want to do Merck? MRK. All right, let's take a look at Merck. 127, the 127 is going from 85 to 90. That's not 1%. So it would be kind of a no, just based on those numbers. Now let's take a look at the last 30 days. Okay, she goes up, pulls back, goes up, pulls back, goes up. Now she's pulling back again. Yeah, I don't like the chart. It's not as plain to see at the moment. Also, the numbers don't look right. So Merck is going to be a no. Sorry about that, Mark. Companies increase. Yep. WMT Health. Heath. Oh, Heath Martin. Heath. Okay. Kind of like the candy bar. Heath. Wally World. WMT. Okay. Wally World's going to be a no for a couple of reasons. Reason number one should be plain and simple. Okay. It's at the high of the year. That's an automatic no. And then the 70 is going for 56 cents. That's a no also. Sorry. J.C. Penney. Really? It has no options, so that's going to be a no. All right, J.C. Penney's a no. Sorry, dude. Thank you. You're welcome there, Tom. Mark, MDC. Didn't we take a look at MDC already? MDC, Medtronics. Yeah, MDC is going to be a no, dude. Sorry. Applied Materials. Applied Materials. Is that a... No, that isn't it. What is Applied Materials? Not... I don't know the ticker symbol for Applied Materials. Oh, AMAT. Here we go. That's going to be a no. Okay. Jahai, 250. She drops back down, pulls back up. What do you think she's going to do next? Back down again. Exactly. Why would I do that? Bro, I wish I was your son. No, you wouldn't. I was I'm very tough on the kids. Andrew, it's like you're speaking another language. Where can I learn more about this? Andrew, oh, wow. I don't like to think of it being another language. It's actually really not that difficult. You're buying decent companies you probably heard of. Okay, ConocoPhillips, Comcast, General Electric, Ford, Lowe's, Caterpillar, Procter & Gamble, Abbott Labs, Hormel, companies like those. All right, and then we look at the chart. What is the chart telling me? The chart's telling me the high is right here and the low is right here. Okay, she goes from the 30-day bottom to the 30-day top, and there's profit taking. Well, the profit taking keeps going until we, the investors, saying, wait a minute, that thing's worth more than 230. So I buy it at 230. She jumped back up. Now I'm at 245. Wait a minute, I want to take my profit. The charts tell us exactly what's going on. All right, it depends on the time frame you're looking at. Okay, so let's go back to a year. Okay, so here's the year. You can't just. It's really that simple. Okay, here's the high, here's the low, here's where it was, here's where it is, and this is the direction it's going. Well, a year ago we're at 130. Now we're at 250. That's almost doubled in price in a year. Okay, what do you think's going to happen if your stock doubles in price in a year? Do you say, "Ooh, look, yeah, it's going up, it's going up"? It's not a profit until you take it. Okay? Yeah, you buy it at 150 way at here in November. Now it's worth 250. Well, it's not worth anything until you take that profit. Nobody ever went broke taking profits. And I'm sorry if it sounds like it's the new language. It's really not. I mean, you know it's what. All right, Rick, check out YouTube covered call. Yep, that'll probably help you out. Uh-oh, I missed some of those questions. They keep bouncing all over the place. MDC was a no. Sorry. No language, blah, blah, blah. Check out the YouTube covered call. Okay, Marcos. How could you make 1% a week if you aren't using all your money in one trade? Marcos, that's an interesting question. Let me show you something real quick, Marcos. Because I get this question once in a while. All right, Marcos, here we go. This just should be a little helpful. All right, you ready? January, the first week of January, week number 1. I made 2.12%. How did I do that? Well, I had 1,000 shares of Macy's, I brought in from last year. I had 800 shares of General Motors, okay? I got 400 shares of Ford, 800 shares of CVS. Okay, so 8 contracts at $2.15 a share. That's $1,600 right there. That one trade, $1,600. Ford, 4 at 35. That's $140. Not that huge. This one here, 20. That's $160. 10 at 40. That's $400. Okay, so it's 4. Well, anyway, it was like 2.2% in January alone. That's the first week of January in that one particular account. Okay. Second week of January, 1.3%. Okay, again, I had Macy's, I brought over Ford, General Motors, Clorox, Lowe's, Ford. Okay, so if 98% of all of my money is invested at one point in time, I make 1% off of that 98%. All right, so account number 1. See, there's 2 different accounts. These are 2 accounts I share with you guys. Account number 1, okay, I started out with, in the beginning of January, $117,000. All right? Now, it is up so far 31% from the beginning of the year. All right? Now, I've already withdrew over $25,000 because that's what I live off of. Okay? Account number 2 is a margin account. $100,000 in cash, $100,000 in margin. So it's $200,000 sitting there. Okay? Half cash, half margin. Okay? It's a lot more risk. Understand, margin has more risk. This account here is up 69.5% so far. And I haven't even finished all the calculations yet because they've been working on my website for the past 2 weeks and I haven't been able to upload anything in the past couple of weeks. So yeah, account 1 is almost 32%. Account number 2 is almost 70%. For the year, we're only halfway through. So yeah, I hear what you're saying, but you're not accurate about what you're saying. Take a look at the positions. Kohl's, Macy's, Bitto, MPW, FCX, more MPW, more Bitto, and AEO. That's all one week's position. Okay, it's not just one position a week. No, it's all right. Here we go. Let's read them out really quick. Week 1, 4 positions, 2.12%. Week 2, 5 positions, 1.3%. Week 3, 5 positions, 0.85%. See, I didn't make my 1% that week. Week 4, 5 positions, 0.9%. Didn't make my 1% there either. But week 5, 1.03. Week 6, 1.06. Week 7, 1.9. 2.03, 2.32, 4.63, 3.9, 0.9, 1.2, so on and so forth. All my trades are right there. I'm not hiding anything. Let's go back to where we were. Here we go. Oh, yeah, so AMAT is a double no because look where we are. There's the high, pulls back, high again. What do you think is going to happen now? She's going to come down. So sorry, MAT is going to be a no. Jack. Could you make 1% a week? Oh, how could you make? All right, I just answered that question. Hopefully that explains it. Okay? Now, I have 6 different accounts. All right? I share 2 of them publicly. I just showed you account number 1, $117,000 in it. It makes over 1% per week on average. Okay? We are in week number 27. Monday is week number 28, week 2 for the 3rd quarter. All right? But it's also called week 28 of the year. There's 52 weeks in a year. 13 weeks and a quarter, all right? So week 2, 3rd quarter, week 27 for the year, actually week 28 for the year. Okay, let's go to some more questions. So you are looking for the call buyer to exercise. Well, I can personally care less if the call buyer exercises. My main concern is, am I making my 1% for the week? Is it a good company to jump into? Applied Materials is a good company, okay? But not this week. Even if the numbers are correct, 242, the 242s, yep, making over 1%. But look, here's the high, she pulls back, she jumps back up again, now she's gonna come back down again. So AMAT doesn't look like it's gonna be a good contender for another 2-3 weeks because you gotta wait for the profit taking to be done and over with for it to find a new bottom way down here somewhere to turn around and go back up again. It's all in the timing. You know, you buy low, you sell high. You don't buy high and wait for it to go higher. I don't do the game. Strong company, week at a time. Yep. Thanks, Google. Friday made 280 on Apple. Cool. I like Apple. Off a call option. Good. Albert, QCOM, okay. I still hold stocks that match your shirt. I still hold stocks that match your shirt. If it's a no, why would you buy it? That's what it says. It's a no, and what the hell were you thinking? Google, yeah, I don't do Google. Saks Fifth Avenue, you actually have to give me the ticker symbol. HRB, Leanne, I don't think I've ever heard of HRB. But I'll gladly look it up for you. HRB. Yeah, it's a no. Do you really want me to pick on you, or don't we just leave it at a no? Coffee break wants to take a look at Mara. I like Mara. M-A-R-A. Marathon 2017 to 2013. The 20s are going. Ooh, that's nice. Now, I don't want you to buy stocks just because the premiums are fat. You gotta make sure it's a company you don't mind owning for long term. Do you really like Marathon Digital? Okay? Don't buy it just because the premiums are fat. Look at the premium. 2013, if I sell the 20s, I can get 92 cents. You take your 13 off there, then you're walking away with 79. 79 on a $20 stock is close to a 4% return at the 20. Right now she's at 2017. She's on a little bit of a drop. But let's take a close look at that. Let's take a look at these numbers on Mara. Because we know the premiums are great. Look at the premiums. The premiums are outstanding. I like the premiums on Mara. But a year ago we're at 1550. Bottomed out at 687, and that was the beginning of October. The end of the year, she folded at 29. She tops out at the high of the year was 34.09, and then the bottom was 14.14. This is the last 30 days right here. Okay, take a look. Okay, the high, the low, where was it? Where is it? What direction is it going? Okay, look. She drops, pulls back, drops, pulls back, drops, pulls back. Here's your 30-day high right there. 30-day bottom, 30-day high. What do you think is going to happen? Profit taken. So I figure a couple more days, midweek, next week maybe, it'll turn around. CMG, you want to look at CMD? CMD. That's a no. No options means no thank you. Okay? Applied Material, love the information, way to go. Amazon's a no, they don't share their profits. Now, Robert John McKeon, you like Intel. I like Intel. I got a nice profit last couple of weeks on Intel. Okay, let's take a look. First thing I always want to take a look at is, what am I paying for it? Well, here's 32.06. What's the 32 going for? 55 cents. You take the 6 cents off there, so you're walking away with 49. 49 is well over 1% on a 32. All right? So let's take a look at the chart. High, low, where was it? Where is it? What direction is it going? Cool. I like it. So a year ago, we're at 31.80. She tops out and ends the year at 51.51. Last 30 days. Yeah, this thing's going to be a no for a while. So now I jumped out and took my profits around here somewhere. Okay, because I jumped in it last week, got my profits, and the numbers didn't look good for this week, so I don't think I got it this week, did I? Hold that thought. Dell calls, nope. All right, so now, right here, here's your 30-day high, 30-day bottom. She goes up, pulls back, goes up. Yep, it's time for her to pull back. Sorry, that's just the way it looks. It's a beautiful language once you know it. Yeah, it kind of is. What do you think about John Deere? Ooh, I like John Deere, DE, but John Deere is a little pricey. Okay, I try not to do stocks over 250 bucks because I just don't have as much money as you think I have. Okay, John Deere is 360. Okay, the 360 is going for 385, so I'm getting my 1%. Great, but she's in a downtrend at the moment, so it's going to be a no. Let's zoom in here real quick. Okay, here's our high here. She goes up, she pulls back, up, down, up, down, up, down, up, down. Okay, she's going to be finding, she's at a new 30-day bottom right at the moment. So as soon as John Deere finds the bottom, because it's not there yet, okay? I like 2 days to the upside before I jump into anything. Now the numbers are working for John Deere, but there's not an entry point yet. I mean, yeah, I can jump in at 360 if I wanted to, but I have no idea where she's going to continue dropping, because she is going to continue dropping. It's just the way it goes. All right, I got 17 more questions, and I missed all of those. Oh boy. Fulman Coy. Oh, Fulman McCoy. Hold or sell Tesla. I don't even do Tesla. Tesla does not have any dividends. Tesla is a no. Sorry. Options, do we take time to learn? Okay, Intel, we looked at Intel. George, what's your intrinsic value of Starbucks with a 15% margin of safety? Wow, Gregory, you want to talk about making things complicated? Holy cow. Now don't get me wrong, everything you just said is perfectly valid for advanced traders, but for beginner traders it's confusing as hell. Okay, so here's the way I look at it. Okay, now it had to be simple. What you're asking is not simple. Okay? Had to be simple, safe, predictable, consistent, and no way to lose. So fine, never buy something you don't want to hold. You're talking about Starbucks. Great. Let's take a look at Starbucks. SBUX. Okay, first question you want to ask yourself, do I like Starbucks? Do I know what Starbucks does? Do I understand the product? Yeah. Okay, now from there, are they profitable? Are they continuously profitable? How often do they continuously increase their dividends? And I can see they have weekly options. So here's the things I want to look at. Number one, what am I paying for it? 76.05. What's the 76 is going for? 95 cents. Well, that's over 1%. So there's one. It makes the money. Okay, great. When do they have in the dividend? Not in July. Not in June. May. April. All right, so if it's in May, June, July, August. Okay, so the middle of August. Check it out. August 16th, Starbucks is having its dividend. Okay, that's what, 3 or 4 weeks away? So yeah, Starbucks is on my list, but it's not on my list for another 4 weeks, the end of July. Okay? The 16th, I like getting 2 weeks ahead of time on a Monday. So I'm going to be looking at Starbucks on the 29th. But I already own Starbucks. So let's bypass that and take a look at something else. Now, if I'm buying it now, 76, the 76 is going for 95, that's over 1%. Great. What is the chart telling me is now a good time to buy Starbucks? Well, apparently not. Let's take a look. Okay, here's your high, here's your low, here's where it was, this is where it is. Delightful. Well then, let's take a gander at it. A year ago, 96.93, topped out at 107.51, and that was the middle of November. She ends up the year at 95. Now, here's where I jumped in. Oops. Okay, take a look at that. Doesn't that look lovely? 30-day high, 30-day bottom. She shoots up, pulls back, a couple of days the upside. I jumped in right here at 88. Okay, I thought it was a good deal at 88 because the numbers look good. What happened the very next day? Look at that. 88, very next day she dropped to 76. Well, for you guys are still listening, TikTok went high and dry. Apparently it's not charging fast enough. Well, well, that's interesting. Not a whole heck of a lot can happen without TikTok. That's the whole crowd. Not many people over here on YouTube, but still, I like Starbucks. You got a couple of people over here on Instagram, a couple of people on Facebook. So yeah, why don't you guys hit me up with some questions while we're waiting for TikTok to sign back on again? Doesn't happen that often, but the phone died. It was plugged in too, so apparently it was using more juice than it was getting replaced. All right, you guys don't have any questions? Well, then we'll just sit here and wait patiently for this thing to open back up again. Puts this fan, keeps me cool too. There we go. Now that's lovely. It just sounds like not much is happening, but that phone should turn on any second now. Or we just could call it a night, 11 o'clock. Whew, wow. So you guys over here on YouTube, you have nothing to say? Weird. Anyway, I like Starbucks. Starbucks was very nice. I like calendar spreads with Starbucks. Let's go back to there. July, here we go. Oh no, some people on YouTube left. Now you guys over on Instagram are awfully quiet. I'm wondering. Trump's New York conviction spurs major donation big bucks from these big names. Trump gets bad news in swing states despite Biden's debate performance. Judge declines to throw out charges against Trump's valet in a classified documents case. Closing its doors reflects the future of retail. Well, of course. A lot of things are going down. Democratic donors prepare to pump money into contest that could block Harris from taking over. Well, she's got no freaking experience as president at all. She doesn't make any damn sense in anything she says. California braces for skyrocketing gas prices. Well, that's normal. Unwind with stretches and flexibility after a long day. Well, that kind of makes sense. What watermelon does to your brain. Well, I kind of like watermelon, so I want to find out what it does to my brain. Well, I'm still waiting for this stupid thing to open up. Boston MD reveals 3 foods that fight memory loss for seniors over 60. Why do some people stay sharp as a whip as they get older, while others have trouble recalling names, dates, and even conversations? New research from Harvard suggests age may not be the culprit. And one medical doctor now says memory problems are often caused by foods you're eating or not eating. Your brain requires fuel to create new brain cells. Recall memories, focus on tasks. Where did you get that food? Well, the food you eat, of course. However, due to the change of modern diet habits, Doc says, aren't getting the nutrients. Okay, your brain doesn't receive the right nutrients. It literally starts to starve, and that's the start of suffering, blah, 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 blah. Okay. Now, I like the fact that they say certain foods you're eating, but what I don't like is that they don't tell you which ones those are. All right, we're going to call it a night because this thing's not turning back on. Stop streaming. Yes. Put that down here. All right, you guys, sorry about that for those of you that are still here.